Hello, hello, traders. Thank you guys so much for tuning in. Welcome to Trading Trail. We are on day number 10 out of a future 250 videos being uploaded. And today is the 10th day of the stock market being open. And this was a much more difficult day to trade. I can guarantee you a lot of traders are probably going to be finishing the day in the red. Thankfully, I am finishing the day in the green. Now, granted, it is a smaller green day for me. But it's green nonetheless. So, quite honestly, I am just thankful to be finishing the day green rather than having a massive red day, which in the past, I trading a day like this with how slow the action was, I definitely would have pushed my luck and tried to scalp some opportunities on some stocks that were setting up. So, like right when news was hitting, I definitely would have tried to trade those. Now, I'm going to go through some reasons why we don't want to trade those. I've definitely been burned on them in the past, and I'm very happy that I walked away early. Now, today was also a weird day because I had problems with my order execution on Weeble. I quite truly believe that it was nothing to do of my fault or my or execution of my own orders. I think my own Weeble was lagging today. So if I have this problem in the future, Weeble's definitely getting a strong worded email and we'll just move from there. Now, sitting down into 6:30 in the morning, that's when I normally sit down and start getting ready to trade for my day. I went ahead and took a screenshot of some of the slower action that we were seeing. Now, if we're just looking at our top gainers list here, we have symbol, percent change, pre-market price. So this is the price that it's traded at. The free float, this is supply. Volume, this is going to be demand. We have all of these on our top gainers list, and all of these are things that I look for when looking for a trade. We're going to go through and systematically cross out every single one that I won't even pull up a chart on. This one has no volume, no volume, no volume, no volume, no volume, no volume. Higher float, but I might still put it up. Low volume, and keep on going. No volume, no volume, no volume, no volume, no volume, no volume. No, thank you. I'm not even putting those up on my chart. I don't trust the setup enough because they are setting up on no volume. That leaves three main tickers to kind of have attention on. And notice how they're all lower floats. So then we notice that, you know what, they're getting decent volume as well. So we have PMAX, SOBR, and WHLR. Wheeler ended up giving us some pretty fantastic opportunities. Now, DOYU, again, has that larger float, so I might put it up, glance at the chart, and then probably throw it back in the trash can because it has absolutely no volume. Now, the first trade that I ended up taking this morning is actually on WHLR, one of those lower floats that was setting up. So right down in here, I decided to get in for the breakthrough 3.5. And I'm just looking for the 10-1 to hold. Now, in reality, the 10 EMA on the 5 needed to hold. And that was our mental stop loss going into this trade. This one's pretty sucky because if I was on a 5-minute chart and just looking at the 10 EMA on the 5, price held the entire time. Unfortunately, I kept it a little too tight and I got wicked out right here. I sold right when price was starting to. I thought price actually closed below the 50 EMA on the 1, which we know lines up with our 10 EMA on the 5. So I decided to actually get out right here. Then later on, the 10 EMA on the 5 continues to hold, and then I'm getting back in right here. So if you're another trader who's trading in a cash account, you have just rotated through a lot more of your settled funds on one trade. And one of them you cut for a loss. I am kind of glad that I kept it tight, but in reality, I should have kept focus on the 10 EMA on the 5 to continue holding, and I got wicked out right there. Quite unfortunate. Now, mentally coming right off of a loss, because I had a small loss right here, I need to break this habit of holding for the bigger move. Because right here, I'm getting in again for the 3.5 break. And that 3.5 break did actually end up giving us a phenomenal move to the next resistance, We know that next resistance is 3.7. And 3.7, I do a little bit of trimming. Right up here at this area, I only sell maybe 25% of my position, which only partially makes back for my loss back here. Now, what I was thinking was going to happen was we get a break and hold of VWAP, and that's going to allow the 10 on the 5 to hold, and then we're going to get that larger move that happened later. My greed in this area ended up costing me a lot of money on the day. So again, I'm selling as the 10 EMA on the 5 fails, and I'm getting wicked out down here. Now, at the same time, with an average from 3.5, you should not hold through this dip. I'm glad I didn't hold through that dip because that would have been a minus, $300 position that I would have ended up holding. That's a little scary in my opinion. I don't want to reinforce habits of doing that. What I should have done is followed my rules, sold more up here into that first profit-taking move, and then I probably could have just closed my position right here. Or if I've took enough profit off the table, then there is an argument to hold through this dip right here if you're thinking that larger move is going to happen. Now again, holding through this dip right here is reinforcing bad habits. Now if I sold 90% of my position up here, no matter the losses I take holding through this dip, my locked in gains right here should offset that. So again, but overall, it's just going to be very hard to argue holding through that dip right there. Now, I do actually end up playing it again. Now, this area was very frustrating for me, quite honestly, very frustrating. Because I had a starter right here, and my goal was to add more shares as it's continuing to break through 3.7. So I wanted to get back in right around here with full position size because the starter is only, quarter position size, maybe even less. So off of this starter, I wanted to get back in with full size as price is breaking out of that 3.7 area for the breakthrough 3.7. 3.7 happens, and then profit taking up here, completely reasonable. Depending on your average, you can absolutely leave some shares as long as the 10 EMA on the 5 holds. We're going to swap that to a yellow highlighter here. You can absolutely hold some shares as long as the 10 EMA on the 5 holds. And it ends up holding, and then we get that nice move all the way up to this area right here. Now, what I'm more frustrated about with my execution on WHLR is, I was mentioning this earlier, is I was having a delay in my execution. Not because I was delayed in my trading, but because it felt more like, let's see here. It felt more like a delay in the order book. So right here, I have a little clip because I was able to record my exit, thankfully. Now my exit, because I had such bad slippage and I had to drag my order up, I have a 3.867 average. That's not ideal. If I hold, so if I have such a high average here, I would be looking to cut as long as the 10 EMA on the 1 holds, because that's basically the only EMA above my average. So I'd be looking to cut up here right when the 10-1 fails. So right here, I'm actually looking at 4 fails. If 4 fails, then I want to get out as soon as possible. Now, I'm going to try and fast forward through this here. And I have the order book on the left side here. Now, I know it's probably going to be very difficult to read, but the order book is going to be reading between 402 and 404 on the ask. When my order goes active,
hopefully you can see my mouse.
when my order goes active, let's see here. It goes active at 407 when the bid never reported 407. So right here, I'm putting my order out, and my order gets placed at 4.07. My order is supposed to get processed on the bid. I'm selling at the bid, so my execution is much faster. If we zoom in here on the bid, let's see, I think I have a screenshot of it. Yep, here we go. So if we zoom in here on the bid, the bids are reading 4.04, and my order gets placed at 4.07. Very perplexing. I also saw all of this kind of slippage on the front side of the move as I was trying to add to my position. So I had this same amount of slippage right here. So very frustrating because none of my orders, like I had to cancel my order, resubmit it, and then it would still slip under price for some reason, and then I'd have to cancel and resubmit. And I only got lucky that I got filled right in this area, bringing my average up. Now overall on the day, I am sitting up $70. If I was able to execute on this nicer trade, because this is a beautiful setup. Like I do want people kind of taking away this setup right here where we have this nice downtrend and how this strong move, break and hold of VWAP, and then that explosion through the next downtrend and the next resistance. All of these things line up for a beautiful trade. Quite literally beautiful trade. Then also noticing how if you have a better average and you're holding for the 10 EMA on the 5, you get that larger move as well. All things that we look for. All things that we look for. Now, later on the day, quite honestly, my emotions are quite at a high after experiencing this level of slippage. I've never had this level of slippage on Webull before, but definitely something to kind of keep in mind when trading the next day and so on. I will be looking for this kind of this problem to occur again. Now, later on in the day, I was kind of thinking on walking away on the day, but I am somewhat glad that I stayed around. Right when I noticed that WHLR was holding this 4 level very well, I was like, you know what? There's an argument to trade this one again. And that argument was looking for the break through this high. Let's change that to our black ink here. So looking for a break through this high. So I end up getting in as price is actually breaking out through here, looking for that move higher. We get the nice downtrend, and then I add to a larger position right here for the break through the downtrend. And then I'm taking profit off the table right up here, and I take the correct amount of profit off the table because I already got burned once this morning. Don't want to let it happen again. So we kept this action very, very tight. I'm very happy about that. Again, looking for the breakthrough 4.48. And then taking some profit off the table into the next resistance, taking some profit off the table up here. Red's going to be profit taking. And then our red marker is going to be me closing the position right when the 10 EMA on the 1 fails. So very, very happy with how this next trade ended up going. I started it with much smaller size, which I'm happy about. And it went exactly to plan. Now, I do want to point out one of the other opportunities that I was able to kind of point out, or at least kind of keep an eye on. Now, this is a stock that we ended up trading many, many days ago. And this stock, DATS, it's another smaller float. And we were trading it back in this area. And I think we also had an eye on it back in this area. But right now we are on a 30-minute chart. And if we notice, what we look for is we have a nice peak, valley, peak. Now this valley is a little bit too deep. Now it's also good to notice how price made a strong move back up. And just from this peak, valley, and a peak, we can form a really nice downtrend that continues to be respected. So price comes back up, tests the downtrend, rejects. Test the downtrend, rejects. Test the downtrend, rejects. Downtrend, rejects. When we finally get that move above that downtrend, there we go. When we finally get that break of the downtrend, then it's all of these previous resistances on the way up. Notice how we get a strong break and then a move above. This would have been an amazing one to keep focus on. Now, I think it would have been a little bit more difficult to trust, especially with how low this recent area was back down here, with how low that valley was, but definitely something to kind of keep an eye on and study. This is a great example of a 30-minute downtrend break leading to a really nice, like kind of, what is this? 1, 2, 3, 4, 5, 6, sixth day move from its initial pop many days ago. So on the 6th trading day, this yielded some amazing results. So you could have been looking for entries anywhere down here. I think 450 and then just holding above 450 would have been great. And then the break of 450, that's when we get the move all the way up to about a $730 resistance. Now, another thing that I did notice is, again, this is just me studying it on my own, is if we pull up DATS on a daily chart, one other thing that we can point out is how price is obviously trading above the 10 EMA on the daily. 10 EMA on the daily is right down here. So right into this day, the 10 EMA on the daily is around a 413 support level. Then if we go back to our 1 minute chart, what is respected perfectly? This 413 is very well respected down here. Now, this was kind of an amazing thing to see as I continue to study it and build it into my own playbook. But 413, aka almost lining up perfectly with the 10 EMA on the daily. And then we get a nicer second leg on that extension higher on DATS. DATS also had some amazing some amazing news when it first popped 6 days ago. Sorry, 6 trading days ago. And we traded it, and it was quite a phenomenal move. I think most of us were green on that ticker when we were trading it that first time. And I continued to kind of keep focus on it because I saw this beautiful downtrend forming as it was continuing to set up. So now one other thing that I kind of want to touch on here is how many other pops and drops we saw in the market today. So this is one of those days where I am actually very, very thankful that I am green, because I know the trader in me a year ago probably would not have been green today. And I say that because when I see slower action, it is even easier to FOMO into these nice moves that happen right when a stock comes out with like a press release or fresh news or anything like that. You can be a really aggressive trader and it can be successful. But in us learning to trade and not scalp, staying away from some of these like front side-esque moves can be very helpful, especially when you're learning. Now, PALI, really quick, there were like 3 other stocks that I saw pop, and then I decided not to trade, and they ended up trailing back off. So this is a good example. We get that nice pop, and then price starts to trail all the way out, failing all of the support levels that it would have been able to make. All of our EMAs, our support levels, excuse me. So we get that nice pop, and then price starts to drop. This is not tradable action. You're trading anywhere in here, you're probably going to lose. Now, one thing to probably keep focus on is one of these recent lows to hold as support and start a next staircase higher. If we saw price hold maybe at a 50% retracement from this level, 50% is right on top of this red area on my Fibonacci. Price comes up, comes right back down, holds this 50% retracement. If we started to stair step here, I'd be looking for a break through that high. Again, this is a scalping trade, not my favorite anymore. Starting 2025, they're not my favorite. That's a new rule. Now, going on to the next one, this was PALI. Next one that comes out with news or some hot release or starts getting pumped was PMEC. And notice how this one singular strong green candle, then price pulls back to a 50% retracement and then tries to make another staircase higher. And then finds a lot of resistance up here at this 1.4 area. 50% retracement. Let's go ahead and circle all of these areas. So out off of this 50% retracement area, it is able to find support and get that next leg up, but finds so much resistance up here that if you're trading it, the likelihood that you're getting caught in that flush is very high. Very high. Difficult to trade. Very difficult to trade. Now, again, this is why we look for those consolidated Nice looking setups. We want to wait for the trade to come to us, not force the trade and force these scalping opportunities, force our trade on the stock. We don't want to force our trade on the stock. Let the stock come to us. This stock never came to us. One of the reasons I never traded it this morning. Now, another one to kind of look at, it was BMRA. This one made some impressive moves today. I mean, it was like, I think it was up like 200%, like into market open. Quite phenomenal. It's a penny stock, got a lot of attention, and started going. Yesterday it was trading around 30 cents. Today it made a high of $1.27. Quite a phenomenal move. Like a full dollar move, 90-cent move on a penny stock is quite substantial. Quite substantial. Now, looking at this stock and thinking on the day, this stock is up 100%, 200% now. Why are we not trading it? Well, the reason we didn't trade it is because there were no opportunities to. Me looking back on this, I don't think there's too many safe entries on the stock. So I'm glad I stayed patient on it. The fact that it was able to make such an impressive move, good for it. Good for any trader that was able to make money on it. But I guarantee you, a lot of traders still probably lost money on it. Now, I know you're probably asking yourself, come on, Noah, the stock's up 200%. How could they possibly have lost money on it? Well, if you get caught in this flush, what about this area? What if you stopped out right before the 10 on the 1 held? What if you stopped out here just for it to make that larger move? There are countless opportunities to walk away red on a stock that's up 200% because any of this action is still on the front side of that move, and it's very difficult to trust. There was never an opportunity for this stock to come to us to trade. Now, even if you zoom in on this very front side area, maybe you look for a break through that resistance right there. But again, if you don't get a strong move like that and price just comes up, the likelihood that it's going to start failing some support levels right after, if you don't get a strong move like that, is very likely. So again, I don't think these are trading opportunities, especially on such a cheap stock. A little bit more difficult for me to personally have high confidence in. So the fact that I stayed patient and didn't even trade this one, I'm actually patting myself on the back, even though the stock is up 200%. The likelihood there's a chance I walk away green from this one could have been pretty high, especially since it's up 200%. But there's also a very likelihood that I'm low red on a stock that's up 200%, especially because I'd be forcing my trades on this stock. I wouldn't be letting the trade come to me. And that's exactly what BMRA would have been. Now, if you're a different style of trader, maybe you find maybe you find some opportunities somewhere in here to trade. But price is so far extended from the 10 EMA on the 5. Do you really want to risk 50 cents, 25 cents just to try and scalp some opportunities like that? And another thing to mention is we just saw two stocks fail out immediately after making that first initial pump. So we see that strong initial move and then a dump followed right after. If we zoom in here, what's telling you that we're not going to see that same dumping move on this stock? In my eyes, there's not really too much of price action to go off of to have a high confidence in a trade setup. So even though we do have a nice little setup theoretically right here, how do you trust it when you just saw two identical moves that immediately trailed off? So I do hope you guys were able to stay patient today trading and are walking away in the green. I did make a few scalps on AMBO, I believe. I don't remember what that chart looked like, but overall, I'm sitting small green nonetheless. But on a day that was this difficult to trade, where we only saw, now again, this was 6:30 in the morning. Things did actually end up changing, but overall, the market conditions here were very, very slow and difficult to trade. Now, one of the other reasons that this might be is yesterday we did have that CPI report come out. CPI, again, standing for Consumer Price Index. I know Sensei also mentioned it in his good morning message this morning. So, definitely something that we want to be paying attention to. Now, I don't pretend to know everything of what the Fed is going to be making decisions on. This is not financial advice by any means. But the market is definitely taking some time to digest and understand that CPI report. That CPI report, leading up, as the market was leading up to the CPI report, the market sentiment looking into that report was that it was going to be one of the worst reports we've seen in weeks and months or something like that. At least that's what I remember here. Now, if the market is already pricing in a bad report, and then the report comes in, it's still bad, but it's maybe like 10, 20% less bad, the market looks at that and goes, this is a miracle. We've got great news on our hands. And that's what happened yesterday. Yesterday stock market, like S&P, if you track all those larger kind of indexes, all of that stuff rose up a little bit. And now, seeing this slower action, price traders are somewhat respecting, or the market is somewhat respecting that bad news that is still trying to get digested from that market. Because to my knowledge, that CPI report, it was bad, but it wasn't as bad as people were thinking it was going to be. So that's somewhat of a, okay, time to buy stocks. And then, okay, we still need to be cautious now. So approaching market conditions each morning with a very cautious mindset is definitely going to be the right move, because that's the game that we're in, preserving capital. And even though I had some very sloppy order execution, which might or might not have been my fault, I am very glad with how patient I was able to stay today, because I can guarantee you a year ago, I was the type of trader to get caught in pumps and dumps like this. It happened to me all the time. Because I just see, oh, it came out with news and that's a reason to trade it. No, it's not. Let's let the trades come to us, be patient, and here's to a nice 2025, team. Thank you guys for kind of tuning in today. I think this one might be a little bit shorter of a review. But if you guys have any questions, you guys know the drill. Like, subscribe, comment, yada, 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 yada. Thank you guys for tuning in, and I will see you guys tomorrow morning, January 17th, and that's going to be the 11th day of the stock market being open this year. Let's get after it, team. Have a good day. Bye.